Hello. So, friends, we start with perquisites, we'll end perquisites and we'll end PF also. So today we are going to end with salary. Okay. See, perquisites, I told you that in perquisites, what is the meaning of perquisite? It is additional personal benefits. See, there is a difference between allowance and perquisite that you need to understand. See, allowance means it is a fixed amount given on a regular basis in addition to salary. This is allowance. Now if I'll give you one example, that 2000 rupees per month for traveling, 2000 rupees per month for traveling in addition to salary, that is allowance. 20,000 rupees per month to meet the rental expense, that is also allowance. House rent allowance. Now, instead of giving you 20,000 rupees per month, I give you an accommodation only to stay. It is not allowance, it is perquisite. I am giving you 3,000 rupees per month to meet the medical expenses. That is allowance. But if your medical expenses and the treatment expenses met by me only, it is perquisite. So there is very fine line of difference between allowance and perquisite. Don't mix both of them. Yes or no? Hello, sir. At your house, you need some domestic servants. So to engage and pay them salary, I am giving you 5,000 rupees per month. That is servant allowance. But at your home, I am sending servants only. That is perquisite. Getting my point? So there is a difference between both of them. Now allowance is what? A fixed amount given on a regular basis in addition to salary. Amount will be given. Here it is a personal benefit which will happen in addition to salary. Personal benefit. The benefit of personal nature. Now this benefit can be monetary, it can be non-monetary. Monetary means what? For example, if your electricity bill of your house, amounting to 5,000 rupees, your employer paid, isn't it a personal benefit for you? Yes or no? It is a perquisite, but it is a monetary benefit. Why? Because the amount of personal benefit is already known. I am saying that 5,000 rupees of your house electricity bill paid by the employer, meaning it is a benefit. How much? 5,000. Valuation is not required. It is known as monetary benefit. Yes or no? But sometimes there will be a personal benefit, but you don't know that the benefit is worth how much. For example, I am giving you accommodation to stay. I am giving you. Is it a personal benefit? Yes. How much? You don't know the value of that benefit. So for that, now you will have to determine the value of that personal benefit, and that value which you will determine as personal benefit, that value will be taxable under the head salary. That type of perquisite is known as non-monetary perquisite. Yes or no? Now, see, it can be given regularly also. It can be given sometimes also. It is not necessary that the perquisites will always be given on regular basis. Sometimes even a personal benefit happening for a single time, one time personal benefit might also be taxable under this head. Yes or no? So now any personal benefit given by the employer to the employee, whether in cash or in, whether monetary or non-monetary, either regularly or sometimes, is nothing but perquisite. And if it is a perquisite, it is a salary. And the value of this perquisite will be taxable as income under the head salary. Yes or no? Now tell me, if any personal benefit is happening, but it is not happening in the course of employment, then that personal benefit cannot be taxable under the head salary. For example, I am a businessman, I am a professional, and in the course of my business or profession, if some personal benefits are happening from my clients, from my customers, then am I getting the personal benefit? Yes. But am I getting the personal benefit from my employer? No. So in the course of employment, the personal benefit is not happening. It is happening in the course of my business or profession. Then that will be taxable as my PGBP income. But if it is happening otherwise, then it is treated as gift, taxable under the head IFOs. Getting my point, everyone? So if the personal benefit is not happening in the course of, then there is no employer-employee relationship, then it cannot be taxable under the head salary. It will be taxable either under the head PGBP or IFOs. Now pay attention. As per 17.2, as per, these are your perquisites. These are your, number 1, value of rent-free accommodation. Number 2, value of accommodation at. Number 3, there are certain prescribed benefits or amenities. Prescribed, like motor car facility, domestic servant, gas, water, electricity, educational facility, and free or concessional tickets. These are the benefits or amenities which are prescribed for clause number 3. Even the value of these benefits will be taxable for you under the head salary. Then clause number 4, if any obligation of the employee or the liability of the employee is met by employer, then whatever obligation of liability of the employee met by employer will also be treated as perquisite. Yes or no? Now, if any life insurance policy is there, annuity contract is there of the employee for which the premium is payable by the, then whatever premium which is payable by the employer for life insurance policy or annuity contract of the employee will also be treated as a perquisite under clause number 5. Next one, if the sweat equity shares or securities under ESOP are given as free or at concessional rate by the employer to the, then also the benefit arising will be treated as perquisite. Then clause number 7 and 7A will be discussed with approved superannuation fund. There is a concept of approved superannuation fund. Along with that, clause number 7 and clause number 7A will be discussed. Okay, now there are some notified fringe benefits or amenities. Fringe benefit means non-monetary benefits. Fringe benefit means, so there are some, non-monetary benefits, fringe benefits, which are notified for clause number 8. So these notified fringe benefits are also treated as your perquisite, taxable under the head salary. First is interest benefit. Second one is traveling, touring and accommodation facility. Third one is meals, food, etc. provided by the employer. Then gift. Then credit card facility and club facility. Then use of movable asset. Then sale of movable asset or any other benefit, facility, amenity, service, privilege to the employee. B for benefit, F for facility, A for amenity, S for service, P for privilege given by the employer to the any other, even that will be perquisite. They tried to identify certain benefits, but then they thought that how many we will identify. Even after identifying, we'll lose something. Yes or no? So they stopped identifying and they said, apart from these, any other benefit, any other facility, any other privilege, any other service given by the employer to the will also be treated as perquisite. Yes or no? In all, there are total 21 perquisites. How many? See, this is treated as 1. Accommodation is treated as 1. And how many are there? 5. 5 plus 1? 7, 8, 9. 9, then this is 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. 20 are there. Sir, you were saying 21. No, in fact, it is 22. Two more perquisites we are supposed to see. Medical facility and leave travel assistance, which is not given in section 17.2. It is given in proviso to section 17.2. Because of that proviso, we are going to do two more perquisites. So in all, there are total 22 perquisites. But we are not supposed to do each and every perquisite in detail. We are going to do those perquisites which puts us in problem. Yes or no? So one by one. Please listen to me carefully. See, if the perquisites are there, all the perquisites are given in section 17. So there is clause number 3. Clause number having 5 perquisites. These perquisites will be taxable only in the hands of. And if any of these perquisites are received by non-specified employee, then they will not be taxable. So clause 3 perquisites, 5 perquisites are there. How many perquisites? Will not be taxable if you are a non-specified employee. It will be taxable in your hands only if you are a. I will tell you about that. Okay. But other than clause 3, clause 1, 2, 4, 5, 7, 6, 7, 7, 8, all these perquisites are taxable for all types of employees, whether the employee is a specified employee or a non-specified employee. Yes or no? So one by one we are going to discuss about these perquisites. Yes or no? So first one is clause 1 and clause. Please check. Clause 1 talks about accommodation. Clause 2 also talk about accommodation which is given rent free. And clause 2 talks about accommodation at. So value of these accommodations which is given rent free or concessional rent will be taxable in the hands of the employee. So they are saying that, see, if the accommodation is given rent free or the accommodation is given at concessional rate, so the value of this accommodation will be treated as your salary and it will be taxable for you. Now, how to determine that value, which will be considered as your salary and it will be taxable for you? That is given in rule 3, sub rule 1. Rule 3. See, whatever I have written here, okay, I will sum up everything in one small table itself. Entire thing will be, summarized in a small table. Simple thing you are supposed to remember. Pay attention. See, rule 3 sub rule 1 says that how to determine the value of accommodation which is rent free or accommodation which is given on. Now see, whatever accommodation the employer will give, it will either be rent free or it will be at concessional rent. Now rent free accommodation will be unfurnished or it can be furnished. Accommodation at concessional rent will be either unfurnished or it will be furnished. Now if I say accommodation which is rent free and which is, I will call it RFUA. RF, rent free unfurnished accommodation. Accommodation which is given rent free but which is furnished, I will call it RFFA. RFFA means rent free furnished accommodation. Yes or no? Now after that, accommodation which is given on concessional rent, if it is, I will call it UA at CR. UA at meaning unfurnished accommodation at concessional rent. Yes or no? And if the accommodation which is given on concessional rent is furnished, I will call it FA at. Now how many types of accommodation can be there in the question? These 4. How to value the accommodation? These 4 accommodation that we are going to learn. Okay. See, first one is RFUA. Second one is RFFA. Third one is UA at CR. And the next one is FA at CR. RFUA means rent free unfurnished accommodation. RFFA means UA at CR means unfurnished accommodation at, and FA at CR is simple thing. you are going to determine the value of RFUA only. What? So, value of rent-free unfurnished accommodation. In that, if you will add, see, I will say, in that if you will add value of furniture, it will become RFFA. But to determine RFFA, you need two things. Number one, RFUA also, value of furniture also. Yes or no? But what if there is no furniture? What if there is no furniture? Then RFUA taxable value is this only. Yes or no? But what if there is an unfurnished accommodation which is given at? So definitely you are going to calculate the value of unfurnished accommodation. But out of that, now you will reduce rent recovered from employee. Yes or no? So if the value of unfurnished accommodation is this and no rent is recovered, if accommodation is unfurnished and no rent is recovered, then the taxable value is this much. Getting my point? But if for the same unfurnished accommodation the employer is recovering some rent, so this benefit is given, but out of this some benefit is taken in the form of rent, that should not be taxable in your hand. So what you will do? You will reduce the rent which is recovered by the employer from the, if you will calculate this amount, you have calculated unfurnished accommodation at concessional rent. Now to calculate this value, what you will have to do? You will have to first calculate RFUA. In that you will have to add furniture. Yes or no? So you will get RFFA. RFFA is the value of the furniture, value of the accommodation, value of the accommodation if no rent is charged. But for that same furnished accommodation, if the employer is taking some rent, so remove that rent from the value of RFFA, you are going to get FA at CR. Yes or no? Simple thing, simple. See, in all the four cases, you need what? First, you need value of accommodation. Only accommodation. Value of accommodation. Only accommodation value you will calculate. Yes or no? Then you will add value of furniture. You will add value of furniture. So you will get a total value. This is your total benefit. Now out of this you will reduce recovery. From employee. Yes or no? You will get the final value. Now tell me one thing. If I am calculating the value of RFUA, I will only have value of accommodation, no value of, so this will be my total. And is the employer recovering some amount from me? No, because it is rent free. So this will not be there. So this will be my taxable value of RFUA. Will you be able to calculate like this? Yes or no? Now for example, if it is RFFA, if it is, then will I calculate the value of accommodation? Will I calculate the value of furniture? I will add both of them. And is the employer recovering any rent? No rent. So this will be my final taxable value. Yes or no? This will be my final taxable value. Now what if I say that it is unfurnished accommodation at concessional rent? So the value of accommodation will be calculated. Value of accommodation will be with furniture or without furniture. So there will be no furniture value. So this will be the total. Now, is it rent free or at concessional rent? So now the employer will recover some rent from me that I will reduce. I will get the taxable value. Can you do this calculation? Now what about FA at CR? In FA at CR, what are you going to do? You will calculate the value of accommodation. You will calculate the value of, you will add both of them. This will be your RFFA value. Out of that, minus the rent recovered from the employer. Yes or no? The rent recovered from the employee. This will be your taxable value. So, three things you are supposed to keep in mind. Number one, you are supposed to value the accommodation. Then you are supposed to value the furniture. And you are supposed to check whether the employer is recovering any rent or not. Yes or no? If RFUA is there. If RFUA is there, then tell me, in the case of RFUA, only this amount will be there. This will not be there. Yes or no? In case of RFFA, this amount will be there, this amount will be there, there will be no recovery. Getting my point? In case of UA at CR, this will be there, this will not be there, and this amount will be there. Yes or no? And in case of FA at CR, what will be there? Accommodation, furniture, and rent recovery. All the amounts will be there. And only then the taxable value can be calculated. Yes or no? Everywhere, in all the cases, you are supposed to value the accommodation value. You have to do. Now we are going to learn accommodation value. Okay. So which is there in RFUA. Which is there in RFUA. See, rent free, unfurnished accommodation. This is nothing but the value of accommodation only. Okay. So if you are a government employee, and you are getting accommodation from your employer, how much value of that accommodation will be taxable for you? Licensing fees of that accommodation, which is determined by the government as per its own rules. How the government will determine? None of your business. How the government will determine? None of your business. This amount will always be given in the question. This amount will always be given in the... So what amount? Licensing fees. What amount? Simple. This is nothing but the rental value. This is nothing but the rental value of the accommodation is known as licensing fees. Who will determine this licensing fees? Who will determine this licensing fees? As per its own rules. It is nothing but the rental value of the accommodation which is given to you. Now pay attention. If the government has given you this accommodation because you are a government employee. If the government has given you this accommodation because you are a government employee, how much rent for this accommodation you could have paid? How much rent for this accommodation you could have paid? This much only, no? Which you are not paying because this accommodation is given rent free to you. So this much rent which you should have paid, which you are not paying but you are saving, should be your benefit. Getting my point? Hello sir. So where this licensing fees will be given? It will be given in the question. Pick up this amount and show this amount taxable. This is the taxable value of your accommodation. If you are a what is the taxable value of your accommodation? Licensing fees. Yes or no? Now if you are a non-government employee, and you are getting accommodation, for you, now it will be seen that the accommodation which is given to you, it is owned by employer or it is taken on rent by the employer. Now I am your employer. I am not government, but I am giving you accommodation. The accommodation which I am giving you can be owned by me. My own accommodation I can give you, or I can take one accommodation on rent and that accommodation also I can give you. Yes or no? So if I am giving you my own accommodation, then this will be the taxable value. Hello sir. And if I am giving you an accommodation after taking that accommodation on rent from someone else, so I have taken accommodation on rent, I am paying the rent of that accommodation, and that accommodation I am giving you to stay in this accommodation. Now the accommodation can be given by the employer, that accommodation can be owned by the employer, hello, or it can be taken on rent by the employer. Yes or no? Now earlier, no, this was the case. This is not applicable to you now. This is not applicable to you. What is applicable? See, if the accommodation is owned by the employer in a city, if the accommodation is owned by the employer in a city where the population is more than 40 lakhs as per 2011 census, then in that place, whatever accommodation is given, the value of that accommodation for you will be 10% of your salary. 10% of your, getting my point? If the accommodation is given, in a place where the population as per 2011 census is more than 40 lakhs, then the value of that accommodation for you will be 10% of your salary. What if the population in that place is less than equal to 40 lakhs but more than, then the value of that accommodation for you will be 7.5% of your salary. Yes or no? And if the accommodation is given in a city or a place where the population is less than equal to 15 lakhs, then the value of that accommodation for you will be 5% of your salary. Either 10% of your salary, or 7.5% of your salary, or 5% of your salary. You will calculate this value. You will calculate this. And this is the value of your accommodation which will be taxable in your hands. Yes or no? Now why 10% of salary, 7.5% of salary and 5% of salary? Logic is simple. That if the accommodation is owned in a place where the population is more than, usually employees spend minimum 10% of their salary to pay the rent in that city. So the city where the population is more than, if in that city the employer has not given you accommodation and you would have taken accommodation on rent, how much rent you would have spent? At least 10% of your salary, which you are spending or you are saving, because in that city the employer is giving his own accommodation. Yes or no? What if the city has a population of more than 15 lakhs but less than equal to 40 lakhs? In that city, if you would have taken accommodation on rent, you would have spent at least 7.5% of your salary to pay the rent, which you are paying or you are saving. Why? Because in that city the accommodation owned by the employer is given for use. Yes or no? And in a place where the population is less than equal to 15 lakhs, in such type of cities, usually you spend at least 5% of your salary to pay the rent, which you are paying or you are saving, because in that city the employer has provided his own accommodation. Yes or no? Hello sir. So 10%, 7.5% or 5% of your, which is the amount of rent which you should have paid but which you are not paying, you are saving, because in that city the accommodation is provided by the employer. Own accommodation is provided by the employer. Yes or no? But if the accommodation was taken on rent by the, in any city, now no need to check the population. How much maximum rent you could have spent? 5%, 7.5% or 10%? 10% of your salary, or the actual amount of rent which the employer has paid, whichever is lower, that will be your benefit. That rent you are saving. Getting my point? The rent which you could have paid and the rent which the employer is actually paying, whichever is lower, is your benefit. That amount of rent you are saving, that should be your benefit. So here, instead of, see, this point will not come, 15% of salary will not come, only 10% of your salary or actual rent paid by the employer, whichever is lower. Yes or no? Yes or no? So now tell me, did you identify that how to calculate the value of accommodation? Hello? Whatever may be the scenario, you know how to calculate this value, this value. Either this will be licensing fees. If you are a government employee, getting accommodation from the employer. So, licensing fees of that accommodation will be taxable for you. Hello, sir. What if you are a non-government employee and receiving accommodation from the employer? What value you will write here? What value you will write here? Depends that accommodation was owned by the employer or taken on rent by the employer. What if the accommodation was owned by the employer in a place where the population is more than 40 lakhs? First you will calculate 10% of your salary and you will write that 10% amount here. Yes or no? That is the value of your accommodation. What if the population is more than 15 lakhs but less than equal to 40 lakhs? You will calculate 7.5% of your salary and you will write that amount here. Yes or no? What if the population is less than equal to 15 lakhs? You will calculate 5% of your salary and you will write that amount here. Yes or no? But what if the accommodation was not owned by the employer? It was taken on rent by the employer. Then you will calculate 10% of your salary, or you will say amount of rent paid by the employer for the rented accommodation. Yes or no? Whichever is that lower amount you are going to write here. Did you understand? Value of accommodation is done. Now tell me, with the accommodation, if the furniture is also given, so are you getting the benefit by using the accommodation only, or you are getting the benefit of use of furniture also? Furniture is a movable asset. Furniture is any movable asset, including furniture, given by the employer to the employee for use. Sold, ownership given, or it is just given for use? Once the use is over, you are supposed to return that asset to me. Yes or no? So whenever an asset which is movable in nature, which is given for use, given for to the employee, then employee will have the benefit by using that asset. Employee will have the benefit by using that asset. How much benefit? How much benefit? Simple. If the asset was owned by the employer, then 10% per annum of the actual cost of that asset. 10% per annum of the actual cost of that asset. Per annum I said. Okay. But if the asset was taken on hire by the employer and that asset is given by him, then actual hire charges paid by the employer will be treated as your benefit. Yes or no? This you are going to do for all movable assets, including furniture. So along with accommodation, are you getting furniture? Are you getting furniture? So what will be the taxable value of furniture? 10% per annum of the actual cost of that furniture, if the furniture was owned by the employer. But if the furniture was taken on rent by the employer, then actual hire charges of the furniture paid by the employer will be your benefit. So either 10% will be calculated or actual hire charges, as the case may be. Either 10% will be calculated or actual hire charges, as the case may be. Yes or no? Now if the employer is recovering what? Rent. So what you are going to do? Reduce that rent. Reduce that, whether the accommodation is without furniture or it is with furniture. Will not make any difference. This is the accommodation end. Will you remember this? So first of all, tell me, what will be the value of accommodation? What will be the value of accommodation? In case of government employee, licensing fees, or it can be 10% of salary, or it can be 7.5% of salary, or it can be 5% of salary. These three possibilities are for non-government employee, and accommodation is owned by in a city where the population is more than 40 lakhs, in a city where the population is more than 15 lakhs but less than or equal to 40 lakhs, and in a city where the population is less than equal to 15 lakhs. Yes or no? Or it can be either 10% of salary or actual rent of the accommodation paid by employer, whichever is. So any of these value will come, and this value will come only if the employee is non-government and accommodation is taken on rent by employer. Yes or no? Meaning that this value you will be charging only in the case of. So did you get the value of accommodation? This is as per rule 3 sub rule 1. Yes or no? Now in this accommodation value, you will add value of furniture will be, if the furniture owned by employer, then what will be the value? 10%. No. 10% per annum of actual cost of that furniture to the employer, or it can be taken on hire or rent by the so actual hire charges paid by. So either this value or this value, as the case may be. Now minus what? Recovery of rent from employee, if any. This is the final taxable value of the perquisite. This cannot be easier than this. Did you understand? So will you be able to calculate this value? But one very important thing I would like to ask you. What do you want to calculate here? 10%, 7.5%, 5%, 10% of what? What is salary? Basic DA in terms turnover. I will give you a tight slap. Everything given by the employer to the employee will be taken as salary, except 5 things. So 5 things I am telling you. Remember those 5 things. Except these 5 things, whatever the employer will give you, you are supposed to take everything as a part of this salary to value the perquisite. Yes or no? Number 1, DA not in terms. DA. So if the employer is giving you DA, and if it is not in terms, don't take it as a part of this salary. This does not include DA not in terms. So if you will see DA not in terms, will you include or you will not include? You will not include. Second, employer's contribution to provident funds. Employer's contribution to in excess of 12%, it is your salary and it is taxable also. Yes or no? But don't take it as a part of this salary. Any contribution by the employer to your provident fund in excess of 12% of your salary is your taxable salary. Show that amount in the calculation of your taxable salary. But don't include that salary to calculate this amount. This salary for the valuation of perquisite will not include employer's contribution to provident fund. Yes or no? So first thing, DA not in terms. Second thing, employer's contribution to provident fund. Third thing, value of all other perquisites, whether monetary or non-monetary. See, value of any perquisite will be taxable as your salary. So you have to charge the value of all perquisite under the head salaries. You will have to tax it. But don't take those values to calculate this salary. This salary does not include the value of other perquisites. Yes or no? Number 1. DA, not in terms. Number 2, employer's contribution to provident fund. Number 3, value of all other perquisites, whether monetary or non-monetary. Number 4, exempt portion of allowances. Number 4, exempt. See, you will get some allowances from your employer. Out of those allowances, some portion is exempt, no? So exempt portion is left and only the taxable portion is written in the statement of salary. Yes or no? So the amount of taxable allowance which you have written in the salary statement, only that amount you are supposed to take as a part of this salary. Any exempt portion of allowance, the exempt portion of that allowance, have you included to calculate your taxable salary? No. So if you have not taken it for the purpose of calculating your taxable salary, so don't take that exempt portion also to calculate this salary. But this salary will include taxable portion of allowance will be included. Yes or no? So taxable portion of allowance will be shown in the calculation of taxable salary also, and taxable portion of allowance will be shown to calculate this salary also. Yes or no? Yes or no? And last but not the least, all the lump sum retirement or superannuation benefits. All the lump sum retirement or superannuation benefits like gratuity, pension, leave salary. Yes or no? Even though they are your salary, but don't take that salary to calculate this salary. Getting my point? So 5 things. Number 1. Number 2, employer's contribution to provident fund. Number 3, value of other perquisite. Number 4, and number 5, the salary for valuation of perquisite accommodation facility. Salary for valuation of accommodation facility will include everything except 1, 2, 3, 4 and 5. The salary includes but does not include 1, 2, 3, 4, 5. These 5 things you will not include. Other than these 5 things, take everything from your salary statement. Add all of them, you will get salary. But remember, this salary has to be taken on. And due in which period? Due in the period for which the accommodation was occupied. Accommodation was, for example, this is your previous year. During the entire previous year, the accommodation was occupied by you. During the entire previous year, the accommodation was. So during this period, whatever salary becomes due, except those 5 things, you are supposed to take the entire salary. Getting my point? But what if this is your previous year? The accommodation was occupied from 1st of July 2024 to 31st March 25. So accommodation is occupied from July to March. The period for which the accommodation is occupied. Can I say the period is 1st July 2024 to 31st March 2025. This is the period for which the accommodation is. Whatever salary which becomes due in this period. Whatever salary which becomes due in this period, except those 5 things, will be taken to calculate the value of your purchase. Yes or no? But wait. Some salary will be received in this period, but it is not becoming due in this period. Can you get advance salary which will become due in the next year? Can you receive that advance salary in this period? Will you take that advance salary? No. Why? Because that advance salary, even though you are receiving in this period, hello, but is it becoming due in this period? No need to take that. Getting my point? Hello. What if bonus you are getting in this period? Bonus is as good as taxable on what basis? Receipt basis. Even though the bonus does not become due in this period, but since its taxability is only on receipt basis, it will be assumed as if the bonus is becoming due in this period only. Getting my point? So bonus you will take or you will not take? You will take, no? Hello sir. Now during this period, whatever salary which becomes due, except those from all your employers. So you have to check. Now in this period, how many employers are there? One employer is there, two employers is there. Salary from all the employers which becomes due in this period, except for those 5 things, will be taken to calculate the value of your perquisite. To calculate the value of your perquisite. Will you remember this? Everyone, don't commit mistake, because see, in the examination, no, if you have salary question, if you have question on salary, 100%, in majority of the cases, value of accommodation is there. And students find difficulty to calculate this salary. If you have confidence in this, you will never go wrong. Now, what you are supposed to do? You are supposed to calculate your taxable salary. Okay, no? So in the taxable salary, you will make a statement. You will make a statement. You will write basic salary. You will write allowances. You will write different types of perquisite. So even the accommodation value, you will calculate value of accommodation in the same manner in which we have learned right now. Yes or no? This value of accommodation you are going to calculate, and you are supposed to charge that value under the head salary. Now what you will do, you know, you will first finish the entire salary problem. First finish the entire salary problem, and in the end you will value the accommodation. That will be the last thing to do, because value of accommodation will require salary. Value of accommodation will require, and salary includes everything except 5 things. So everything will be available only if the entire question is solved. No? Hello sir. So solve the entire question, and in the end do the valuation of accommodation facility. Got it sir? Got it sir? So this was your accommodation. Now see, if you are given accommodation in a hotel while you are on official tour, so that is an official benefit, not a personal benefit, will be fully exempt. Taxable value will be nil. But if you are given hotel accommodation while you are on vacation, personal visit, yes or no? So value of accommodation in hotel will be fully taxable for you, because it is fully personal benefit, because you are in personal tour. So if you are on a personal tour, if you are on a vacation, and at the time of vacation your employer has given you hotel accommodation, meaning that the hotel cost, hotel expenditure, everything is met by your employer. So the amount of expenditure on your hotel accommodation is met by employer, paid by employer, reimbursed by employer. Isn't it your personal benefit? Yes, it is fully your personal benefit, will be fully taxable. And what will be the taxable value? Actual amount spent by the on your hotel accommodation minus whatever recovery he is doing from you. This amount will be taxable as your perquisite. But this will be taxable only if you are on personal tour, and on your personal tour the hotel accommodation was provided. What if you are on official tour and the amount of hotel expenditure met by the employer, that is not going to be taxed in your hands. Why? Because that is not a benefit of personal nature, that is a benefit of official nature. So the taxable value here will be nil and it will be fully exempt. Now sometimes the employee is on transfer. Sometimes the employee is on. So at the time of his transfer also, the employer can provide him accommodation. At the time of transfer also, his employer can provide him accommodation. So if you are getting transferred from Chennai to Mumbai for your job, so you might be going for, other job or the same company. You are going to do the job in Mumbai in head office. You were in the branch in Chennai. Now the same company is calling you to work at Mumbai head office. Yes or no? Or you are leaving a company in Chennai and you are going and joining new company in Mumbai. So your employer, either your existing employer or your new employer, will provide you hotel accommodation because you are shifting your location. You are getting transferred from one location to another. So whenever the employee is getting transferred, whenever the employee is getting from one city to another, yes or no, one location to, so at the time of transfer at new location, the employee will take his house on rent or the employer will provide accommodation, but that is going to take some time. So till that time you stay in a hotel. The hotel accommodation will be provided by the employer. So employer will bear all the cost. Getting my point? So the hotel accommodation, if provided while the employee is on, will be exempt for the first 15 days. Will be exempt for the first. Meaning if the hotel accommodation is provided for 15 days or less, fully exempt. Fully. But what if the hotel accommodation was provided for 25 days? For the first 15 days, the benefit will be, and for the balance 10 days, the benefit will be taxable. And what will be the taxable value? Simple. 24% of salary or actual amount spent by the employer for those extra 10 days. So for those extra 10 days, what is the amount spent by the employer? For those extra 10 days, what was the salary becoming due in those 10 days? Yes or no? So salary you are going to take for the full year or salary for only those 10 days. Out of the total 25 days, first 15 days, the benefit is exempt. Benefit is taxable for 10 days. So for 10 days, you are supposed to calculate the benefit. So salary you will take for full year or salary you will take for 10 days only? 10 days salary. So you are supposed to see that during those 10 days, what salary is becoming due, except those 5 things. Do you have monthly salary? Yes. Divide by 30, multiplied by 10, you will get 10 days salary. So based on the 10 days salary, the salary which becomes due in those 10 days, except 5 things. Yes or no? Salary for those 10 days, 24% of that. Or for those 10 days, whatever amount actually spent by the employer, whichever is lower, that will be taxable for excess number of days. And for the first 15 days, the valuation will not be done because it is fully exempt. Will you remember this? This was your hotel accommodation. But wait, whatever amount which is getting taxable here as your benefit, either 24% or actual amount, whichever is lower, that lower amount will be your benefit. It will be taxable for you. But out of that benefit, if some amount is recovered by the employer, if some amount is, so reduce that amount, because that amount of benefit is taken away by your employer. That should not be taxable. Getting my point? So reduce that amount, whatever the employer has recovered from you. Will you? Everyone? So this was your accommodation in hotel. So normal accommodation valuation we have learned. Now if the accommodation is provided in hotel, then also we have seen. Now if double accommodation is given, what is given? See, usually if you are given one accommodation, value of one accommodation is taxable, no? So what if the employer is giving you 2 accommodation? Definitely the value of both the accommodation should be taxable. Accommodation 1, accommodation 2, value of both the accommodation should be taxable. Bloody, we are not leaving the value of first accommodation. Why would we leave the value of the second accommodation? Both the accommodation value has to be taxable. Yes or no? So if the employer has given you two accommodation, value of both the accommodation fully taxable. Getting my point? But if double accommodation is arising because of transfer, see, you are shifting to Mumbai. So in Mumbai you are going to get new accommodation by the employer. But the moment you are shifting to Mumbai, it is not necessary that your family also will shift with you from Chennai, no? In Chennai you are staying in employer's accommodation. In Chennai, you are staying in your employer's accommodation. Now all of a sudden your employer is saying that you are now supposed to work in the head office, Mumbai. So go and work in Mumbai. We will provide you accommodation in Mumbai. Go there. Immediately you are joining in Mumbai. But you cannot shift your entire family with you, no? Children are having exams, treatment, parents treatment, etc. going on. Getting my point? So what will happen? Immediately you cannot shift your family. You will shift, you will go and work there, and the employer will provide you accommodation also in Mumbai. But you will request your employer, that employer, I will go to Mumbai, provide me an accommodation over there, okay? But don't throw out my family from Chennai accommodation, because my children's exams are going on. My parents are undergoing some treatment, etc. There are many things which are supposed to be done before leaving a city. So please allow my family to stay in Chennai. So you are in Mumbai. Your family is in? Now you have two accommodation. And this is a possibility because of transfer. So what happened? From 1st of April to 30th June, only one accommodation was there. Which accommodation? Chennai. Only one accommodation was there, Chennai. Now from 1st July, you are joining Mumbai. So in Mumbai, you are going to get accommodation. Hello? And simultaneously, in July, your family is also staying in Chennai. So how many accommodations you are having with effect from July? One or two? With effect from July, you are having accommodation at Chennai as well as accommodation in Mumbai. Now this is double accommodation. Now what will happen? Your children's exam will get over, your parents treatment, etc. will get over. Everything you will wind up from here, and then your family will come to Mumbai. Then Chennai accommodation will be vacated and handed over to the employer. Now this took some time until 31st of October, till your family was staying in Chennai house. Now from 1st of November onwards, Chennai accommodation is not there with you. Your entire family has shifted with you to Mumbai. So from 1st November onwards, you are again getting one accommodation, November to March. Accommodation at Mumbai. Now tell me, how many months? November, December, January, February, March. How many months? On the basis of 5 months salary. The salary which becomes due in this 5 months, except those 5 things. Yes or no? The salary which becomes due in these 5 months. So you will calculate the salary, and on the basis of this salary, you will calculate the value of Mumbai accommodation. That value will be taxable. Yes or no? What about April to June? How many months? How many months? 3 months. April, May, June. 3 months. Whatever salary which will become due in these 3 months, except 5 things. Yes or no? Based on that salary, you will calculate the value of Chennai accommodation, and that value will be taxable. But what about this period? This period, when you have 2 accommodation, and this is happening because of your transfer from one location to another. What will happen here? You know, how many months? Tell me. 4 months? 4 months, no? July, August, September, October. July, August, September. See, double accommodation, first 90 days. First 90 days, whatever salary which will become due, except for those, based on that salary, value of Chennai will also be calculated, and value of Mumbai will also be calculated, whichever is lower will be taxable. Any one value will be taxable. Either Chennai value will be taxable or Mumbai value will be taxable. Value of only one accommodation will be taxable for the first 90 days. Now tell me, how many days are there? July 31, August 31, September 30, October 31. How many days? 123 days. How many days? So out of 123 days, for the first, whatever salary which becomes due, on the basis of that, value of Chennai accommodation will also be calculated, value of Mumbai accommodation will also be calculated, and value of any one accommodation which is lower will be taxable in your hands. Yes or no? But how many extra days? Over and above 90 days. For how many extra days double accommodation is there with you? 33 days extra. Yes or no? And now during this 33 extra days, whatever salary which becomes due, except those 5 things, based on that salary, value of Chennai accommodation will be calculated, value of Mumbai accommodation will be calculated, and both the values will be taxable. Both the values will be taxable for excess days. Will you be able to do it? Hello sir, this was your accommodation. Now one important thing, accommodation given at a project site, accommodation given at a project site, mining site, dam site, and that is of temporary nature, should be in remote area, and the area of that accommodation should not be more than 800 square feet. If all these conditions are fulfilled and the accommodation is given, no valuation rule will be applicable on that accommodation, because the value of that accommodation is fully, because that is not given with that intention to give you personal benefit. That was the duty of the employer to provide you accommodation at that site. So employer is just fulfilling his duty by giving you that accommodation. He is not trying to give you any personal benefit. So if that is not with an intention to give you personal benefit, so the value of this accommodation should not be taxable in your hands. It should be fully exempt. No valuation rule will be applicable. The entire value will be exempt. Taxable value will be nil. Will you remember this? Hello? Will you remember this? So how many clauses are there? How many clauses are there? Total 8 clauses are there, no? Now out of that, value of rent-free accommodation you have done. Value of accommodation at concessional rent you have done. You have done the value as per Rule 3, Sub-Rule 1. Whatever I was discussing up till now, no, was Rule 3, Sub-Rule 1. As per Rule 3, Sub-Rule 1, you will determine the value, and that value you will show taxable in your salary statement. Getting my point? Now, clause 3. Which clause? Clause 3 talks about prescribed benefits or amenities. What are the benefits prescribed? Motor car facility, domestic servants, gas, water, electricity, educational facility, and free or concessional tickets. If any of these 5 benefits or amenities are given to you, then their value will also be calculated as per rules. As per, so value of motor car facility as per Rule 3, 2. Value of domestic servants as per Rule 3, 3. Value of gas, water, electricity facility as per Rule 3, 4. Value of educational facility as per Rule 3, 5. And value of free or concessional tickets as per Rule 3. As per these valuation rules, the value of these benefits or amenities will be calculated, and the value which is calculated of this benefit will be taxable in your hands under the head salary, only if you are a specified employee. Only if you are a, what if you are a non-specified employee and receiving these benefits? No need to do the valuation, because these benefits are not taxable in your hands since you are a non-specified employee. Yes or no? So now tell me, who is a specified employee? Who is a specified employee? Pay attention. Your employer is a, you are the, and also a director in that company. You are a specified employee. So meaning you are an employee in a company, and you are also a director in that company. So you are a director employee in any company. You are a specified employee. Or you are an employee in a company Not the director in that company, but you are a shareholder in that company holding 20% or more share capital, beneficial ownership in the shares of that company. Then also you are a specified employee. Getting my point, sir? Hello, sir. Next one. You are the employee of any employer. Now your employer can be any person. Now your employer can be any person. So you are any type of employee. And you are not covered in A and B. You are neither the director of a company nor the substantial shareholder in that company. So you can be any other employee in that company, or you can be employee of any other person, but your net cash salary during the previous year from all the employers is more than 50,000. Net cash salary during the previous year from all your employers total is how much? More than. Now whenever you will calculate this net cash salary, only take monetary salary, only take, except non-monetary amounts, except portion of, exempt portion of. So don't take non-monetary amounts, don't take exempt portion of allowances, yes or no? Take all the monetary salary from all your employers during the previous year and take the deductions available under section 16. Your total amount is net cash salary. That should be more than 50,000. If this is the case, you are a specified employee. So you are this employee, or this employee. See, if you are not covered by A and B, no, definitely you are going to be covered by third point. Tell me a single employee in today's time who is not earning more than 50,000 net cash salary. Majority of the employees, even a small peon or a small clerk, will earn more than 50,000 net cash salary in a year. Yes or no? So even if you are not covered by A and B, definitely you will be covered by C. Because net cash salary, the limit is so small that this limit will be satisfied by almost every type of employee. Yes or no? So now, specified employee. Did you understand this? Now the 5 perquisites which I am going to tell you. How many perquisites? 5 perquisites. Number 1, motor car facility. Number 2, provisioning of domestic servants. Number 3, provisioning of gas, water, electricity. And number 4, educational facility and free air concessional tickets. If you see any of this, perquisites given by the employer to the, and if the employee is a specified employee, then their value will be calculated and that value will be taxable under the head salary. Yes or no? Yes or no? Now first of all, motor car can be given. Motor car can be given. No, motor car facility is given. What is given? Now see, motor car facility will be given for the motor car which is owned by employee, or the motor car which is owned by employer or taken on hire by the. So first of all, you will have to identify in the question that whose motor car is there. The motor car can be of the employee and the motor car can be of the employer. Now employee's motor car is there. But the running and maintenance expense, what did I say? Running and maintenance expense of that motor car can be met by employee himself, or it can be met by employer also. Now, is the employee getting some benefit? Whose motor car is there? Employee's motor car. Running and maintenance of the motor car is met by employee. Is the employee getting any benefit from the employer? No. This situation does not result into any benefit. Ignore this situation. But if the motor car is owned by and expenses of the motor car are met by, is the employee getting any benefit? What benefit? Benefit of expense being met by employer. Yes or no? So now tell me, how much benefit will happen to the employee? The amount of expenses of his motor car met by employer. Yes or no? If the employer would not have met, Who would have to meet that? So employee is meeting or employee is saving that amount? Isn't it a benefit for the employee? What is the amount of benefit? Actual amount. What did I say? Actual amount of the expenditure met by is the benefit for the employee. Minus after meeting those expenses, if some amount is recovered from the employee, that amount you reduce, because see, entire amount of benefit is given, but out of that benefit, some benefit is taken away, no? By recovering the amount. So reduce that amount. So what you will do? Actual amount of expenditure met by employer is your benefit, minus amount recovered from the employee. So the net amount is your benefit. Net amount is your. Now, will this benefit be taxable for you? Or it will not be taxable for you? Depends. What did I say? On the use of the car. If the car is used only for official purpose. So don't you think that the benefit which you have just now calculated is fully official? Should be taxable or should be exempt? Fully exempt. What if that car is used only for personal purpose? Then the benefit which you have calculated is fully personal in nature, will be fully taxable. Yes or no? And what if the car is partly used for official purpose, partly used for personal purpose? Then the benefit which you have calculated cannot be fully exempt, cannot be fully taxable. Out of this benefit, some benefit will be treated as exempt, being related to official use, and the balance amount will be taxable. Yes or no? So now tell me, whose car? And who is meeting the expenses? I am talking about which expenses? Running and maintenance expense. Sometimes the driver's cost may or may not be included. So surely this expense is only what? Only running and maintenance expense. As of now I am talking about only running and maintenance expense, but I will also include the driver's expense at the correct time. Yes or no? But right now tell me, is this expense running and maintenance expense? All the expenses of the car is owned by employee, expenses are met by employee. Is there any benefit given by the employer to the employee? No. Ignore this situation. Now if the car is owned by the employee, expenses of the car, running and maintenance expense of the met by all the running and maintenance expense met by. Now driver's expense, what did I say? May or may not be met by employer. May or. What if the car is driven by you, no driver? Then only the running and maintenance expense met by employer is your benefit. Hello sir. What if car is driven by a driver and the cost of driver is met by you? So this expense will include only the running and maintenance expense met by employer, because driver's expense you are only meeting, no? Hello sir. But what if the car is driven by a driver and along with the running and maintenance expense which is met by employer is also paying for the driver? So now this running and maintenance expense will also include driver's cost also, driver's expense also. Getting my point? Entire amount is your benefit. Entire amount is your. See, if the car is used only for official purpose, only for, so entire benefit which you have calculated, amount spent by the employer on your motor car as the expense, plus driver's salary if any he has paid. Yes or no? Entire amount is your benefit, minus the amount recovered from you is your benefit. But that benefit will be fully exempt. Why? Because the car is used only for. But what if the car is used for? So amount of expense actually met by, maybe with driver or without driver. Yes or no? Running and maintenance cost 100% met by employer. Yes or no? But the driver's cost may be there or may not be there. Okay. Minus amount recovered from you. This is the benefit. This benefit will be fully taxable in your hands if the car is used only for. Now what if the car is used partly official, partly? Can you see? This is copy and this is paste. Both the things are same, no? Yes or no? Now here it is fully taxable. Fully? Here it is fully exempt. Can you get full exemption over here? Can you get full taxability here? No. Why? Because car is partly official. Partly official. This is your benefit. This is your. Out of this benefit, some amount will be treated as official. Some amount will be treated as and will be exempted. And the balance will be taxable. How much will be treated as official? 1800 per month. 1800 or 2400 depending on the engine capacity of your car. If the engine capacity of your car is 1600 cc or less, then towards the official use reduce 1800 per month. And if the engine capacity of your car is more than 1600 cc, reduce 2400 per month. And don't reduce 900. Don't reduce if the expenses included only the expenses of car and not driver. But if this expense includes the running and maintenance expense and also the expense of driver which was met by, then additionally reduce 900 also for driver. Then 1800 plus 900, 2700 will be reduced. 2400 plus 900, 3300 will be reduced. If the driver is also provided by the employer, meaning this expense also includes the driver's cost met by employer. But if this expense does not include driver's cost, then only 1800 and 2400. No need to reduce 900. Getting my point? Hello, sir. So first of all, tell me, whose car? Whose expense? Employer's expense. What is the benefit? Expense. What is the benefit? So all the expenses met by the employer may or may not be with driver's cost. Yes or no? Will be your benefit minus the amount recovered from you. Either this amount will be fully exempt or this amount will be fully taxable depending on the use of car. If the car is fully official, this benefit will be fully exempt. If the car is fully taxable, fully personal, then this benefit will be fully taxable. But if the car is used partly official, partly personal, then this benefit cannot be fully taxed, cannot be fully exempt. Out of this, some amount will be treated as exempt and the balance amount will be taxable. How much will be exempt? 1800 flat per month or 2400 per month depending on the engine capacity of the car. Yes or no? But if this expense also includes driver's cost met by the employer, meaning the driver is also provided by the employer, then 1800 plus 900, 2700 will be reduced, or 2400 plus 900, 3300 per month will be reduced, and the balance amount will be the taxable value of perquisite if the car is used partly official, partly personal. Will you remember this? Yes or no? Now come to this part. Now motor car is owned by or it is taken on and that motor car is given to you. Will you get any benefit? Yes. You are using the car provided by the employer. So benefit by using the car is happening. Benefit by using the car is happening. And along with that, expenses are also met by. So benefit of expense is also happening. How many benefits happening? One or two? Use of the car is also a benefit. And the expenses of the car is also met by employer is also a benefit. Yes or no? So now tell me simple thing. Car is a movable asset or an immovable asset? Furniture was also a movable asset. Do you remember? And that time I told you, any movable asset, any given by the employer to the for use, the benefit will be 10% per annum of the actual cost of that asset if it was owned by the employer. Yes or no? Or actual hire charges paid by the employer if it was taken on hire by the employer. For furniture we did the same thing, no? So for motor car also we are supposed to do the same thing. So do you know how much benefit will happen by using the car? Which belongs to? Which belongs to? Or which was taken on rent by the? How much benefit will happen to you by using this car? 10% per annum of the actual cost of that car if the car belongs to employer. Or if the car was taken by the employer on hire, then actual hire charges of the car as the case may be. So you will take 10% per annum of the actual cost of the motor car or actual hire charge of the motor car paid by the whichever is higher, whichever is lower. We'll give a tight slap as the case may be. If the car belongs to employer, then take 10% of the actual cost. Don't take actual hire charges. Hello? But if the car is taken on rent by the employer, don't take 10%. Take actual hire charges paid by the employer. So this is the benefit happening to you by using this car. By using this. Now, the car is used by you. You know how much is the benefit of this car. And the expenses, running and maintenance expense of the car is also met by. Don't you think along with the use of car, benefit of expense is also happening? Benefit of. So what will happen here? Tell me. This is for the use of car. This is for the use of car. Now expenses are also met by. So actual amount of expense met by. This may or may not be with driver. Running and maintenance cost 100% met by employer. Yes or no? But this expense may or may not include driver's cost. Okay. So whatever expense which is met by employer may or may not be with driver's cost will also be taken as your benefit. Can I say this is the benefit by using the car? One benefit. This is the benefit of expense. Both the benefits will be added. This is the total benefit minus amount recovered from you. This is the taxable value. This amount will be fully taxable if the car is used only for. But the same benefit no need to calculate also if the car is used only for, because the benefit will be fully. Getting my point? But what if the car is used partly official, partly personal purpose? Partly official, I would have written this, and out of that some amount is exempt, like I did in the last case. Yes or no? But here the rule says that if the car is partly used for official purpose and partly for, then no need to go and calculate any amount. We are going to charge tax on a flat amount. This flat amount will be taxable for you if the car belongs to employer, or employer has taken the car on rent and given that car to use, and expenses of that car is also met by employer. That car will give you benefit. How much? This much benefit only. Hello? Which will be fully taxable if the car is fully personal used. If the car is used only for official, then this benefit will not be taxable. Getting my point? But if that same car is used for partly official, partly personal, then this benefit minus something exempt, balance will be taxable. No, nothing like that. Do one thing, we are telling you a flat amount. We are telling you that flat amount will only be taxable. Either 1800 per month will be taxable or 2400 per month will be taxable, depending on the engine capacity. And if for this car, the expenses were met by the employer along with driver, then add 900 extra. So 2,700 will be taxable or 3,300 will be taxable. Getting my point? This flat amount we will tax. Last time this amount was reduced and the balance was taxed. Getting my point? Now this time, if the car belongs to employer, expenses of the car is also met by employer, maybe with driver or without driver, but the car is used, partly official, then this amount will be treated as your taxable amount only. No need to find out the value of use, find out the value of expense. No need to do all these things. This flat amount we are going to charge. We will not charge any amount more than this, and we cannot accept any amount less than this. Getting my point? Now for this car, which was partly official, partly, if the employer has recovered some amount from you, don't reduce that recovery out of this. This flat amount will be taxable. Nothing more, nothing less. So for this car, if the employer has recovered any amount, ignore that amount. That amount will not be reduced out of the taxable value. This flat amount will be taxable in your hands. Will you remember? Will you remember? Now next one. If the motor car is used, if the motor car is, motor car is owned by employer, or it was taken on hire by the employer, and the expenses of that motor car is now met by how many benefits happening? One benefit or two benefits? See, here it was the benefit of use also and expense also. So we calculated both the benefits, use plus expense. Both the benefits we calculated, yes or no? Now check. The motor car belongs to employer or taken on hire by the employer. That motor car you are using. So definitely benefit of use is there. But who is meeting the expense? Who is meeting the expense? Expenses are met by. So only one benefit is happening. Use. Benefit of expense is not given by the employer, because who is meeting the expense? Who is meeting the running and maintenance expense? So if the employee is meeting the running and maintenance expense, will you add the expense? No. Only take the value of use. Only take the value of. And what is the value of use? 10% per annum of the actual cost of the car. If the car is owned by, and if the car was taken on hire by employer, then actual hire charges. Will you add expenses met by employer? Is the employer meeting the expense? So no need to add expenses met by employer. But wait. Running and maintenance expenses are met by. Don't you think the employer might meet driver's cost? Employer might meet running and maintenance expense 100% met by. Nothing out of this met by employer. But don't you think employer may still meet the cost of driver? So use 10% or actual hire charges plus expenses met by employer? No. But the driver's cost may be met by employer. So you'll have to add the driver's salary paid by employer, if any. Driver salary paid by employer, if any. Can I say this is for the use of the motor car? This is for the, and this is for driver's salary. If paid by, what if the employer is not paying the driver's salary? Then this amount will not come. Hello? But if for this car, the employer is giving you car along with the driver's salary is also made by him, then only add this driver's salary. Will you add the expenses here? Running and maintenance expense? No, because employer is not going to meet the expenses. It is met by employee. So no need to add those expenses. Getting my point? Now this is the total benefit. This is the total minus if some amount is recovered by the employer. So this is the taxable value. This is the will be fully taxable. Will be if the car is used only for, and this amount will not be taxable if the car is used only for official purpose. This scenario is not arising into any perquisite. Whose car? Employers. Whose expense? I am incurring. And bloody the car is used for official purpose. What type of benefit I am getting from the employer? No personal benefit happening. Getting my point? So this is not going to result into any perquisite. Official use. The car is used only for official purpose. But if that same car is used for personal purpose, then this is the benefit arising. And that benefit will be fully taxable. Yes or no? But what if that same car is used partly official, partly personal? Last time what we did? A flat amount. 1800 or 2400 plus 900 if the driver was also provided. We have charged that amount, no? Hello? We charged 1800, 2400 for two benefits. Use as well as expense. Here two benefits are happening or only one benefit? Which benefit? Use. So here a flat amount should be taxed. Yes, if the car is used partly official, partly personal, then a flat amount should be taxed here also. Because it was taxable last time, a flat amount was taxed. So this time also a flat amount will also be taxed. Last time the flat amount was 1800 or 2400 because there were two benefits. Now two benefits or only one benefit. So definitely the amount, flat amount taxable should be higher or should be lower? It should be lower. Yes or no? So charge 600 or 900 depending on the engine capacity. And if the driver was also provided by the employer, then additionally charge 900. So total will be 1500 or 1800 if the driver was provided by the employer. Driver's cost was met by the employer. But what if the driver's cost was not met by the employer? No need to add 900, charge this amount only. Yes or no? If the car is partly official, then this amount will be taxable. Flat amount will be taxable. Nothing more, nothing less. So for this car, if the employer is recovering some amount from you, don't reduce that amount, ignore that amount. Because the flat amount has to be taxed. Will you remember this? Hello sir, this was motor car facility. This was motor car facility. Yes or no? Pay attention. Now any other automotive owned by the employee and expenses met by the treatment is same which you gave for motor car owned by employee. Motor car owned by, expenses met by how many benefits? One benefit or two benefits? One benefit, no. My car or my automotive I am using, employer is giving me car or automotive? No. So he is not providing the benefit of using an asset. He is not providing the benefit of using the asset. Because I am using my own asset, my own motor car, my own automotive. So there is no benefit by using his asset because the asset is mine. But the expenses of that asset met by, so what is the benefit? Use or expense? Only the expense. Amount actually met by the employer. Amount actually met by the minus the recovery. The balance amount will be taxable if the automotive is used fully personal. If the automotive is used only for, then this benefit will not be taxable. It will be fully exempt. And this benefit will be taxable, but out of that some amount will be reduced, treating it as official. If the automotive is used partly official, partly personal. Last time we had reduced 1800, 2400 and 900 for driver also. Yes or no? This time it is not motor car, it is any other automotive. Getting my point? So if any other automotive is there which is used partly official, partly personal, in that case benefit is this only. Can you see? Benefit is same. This and this. This and this. Getting my point? but a small amount is reduced towards the official use. Last time it was 1800, 2400 in the case of motor car owned by employee, yes or no, and 900 extra for driver. Here engine capacity will not be checked. Flat 900 will be reduced towards the official use. Getting my point? And additionally 900 for driver. You want driver in the scooter. So there will be no amount additionally reduced for driver, because in the case of other automotives, drivers are not provided. Drivers are provided only in the case of motor cars. Yes or no? So only 900 will be reduced. So the balance amount will be taxable. Yes or no? Now see, if motor car or any other automotive is claimed to have been used for official purpose and you are trying to claim the exemption will be available based on certificate of such official use issued by the employer, which is based on the logbook which will be maintained by the employer. This is a procedural requirement. Okay. Next one. Now if one motor car is there, then there is no problem. But sometimes employer gives you 3 motor cars. Motor car 1, motor car 2, motor car 3. How many motor cars employer giving? So the motor car can be owned by employer or it can be taken on rent by the employer. Yes or no? All the 3 motor cars are owned by the employer or they are taken on rent by the employer. And the expenses, what did I say? Of all these motor cars also met by employer. How many benefits are happening? 1 benefit or 2 benefits? Use also and expense also. Yes or no? Now you want to call all these 3 motor cars as partly official, partly personal. Can you do that? The answer is no. You cannot call all the motor cars as partly official, partly personal and charge to tax a flat amount of 1800 or 2400. You cannot do that. Any one motor car, what did I say? Any one motor car out of all these will be treated as partly official, partly personal, and for that a flat amount will be taxable, either 1800 or 2400 plus 900 extra if the chauffeur was also provided. And the remaining motor cars cannot be said to have been used partly official, partly personal. They will be 100% treated as personal and their valuation will happen accordingly. Getting my point? So this is the situation known as pool of cars. This is the situation known as, in the pool of cars, what will happen? Motor car is owned by or taken on hire by, and the expenses of the motor car is also met by. And how many such cars the employer is giving? More than 1. It can be 2 also, it can be 3 also, it can be 4. All such motor cars, can you call all such motor cars partly official, partly personal? No. Any one motor car at the option of the assessee can be treated as partly official, partly personal, and the balance remaining motor cars will be treated as fully personal. So their valuation will be done accordingly. Getting my point? Hello sir. Now do you remember office to house, house to office, office to house, house to traveling is happening. Traveling is, that is known as commutation, transportation. If your employer, if you are giving you rupees 2000 per month, employer is giving you for traveling between house to office and office to, so this 2000 rupees given to meet this transportation cost is known as, this is known as commutation or transport allowance. Yes or no? Because the money is given to meet this cost. Fixed amount is given for this purpose. Yes or no? So fixed amount in addition to salary regularly for this purpose is nothing but allowance. Getting my point? Hello. What will you do with this? Fully taxable. Fully. If the employee is a handicap employee, if the employee is a handicap employee, then this will be exempt up to 3,200 per month. Do you remember that? Yes or no? So what the employer is giving? What the employer is giving? A fixed amount on a regular basis in addition to for this purpose. Then the treatment will be, if the employee is normal employee, then it is fully taxable. Entire 2,000 per month will be taxable. And if the employee is a handicap employee, then entire 2,000 will be exempt. Why? Because the limit is 3,200. Done, sir? Done? But wait. Now instead of giving you 2,000 per month, now instead of giving you 2,000 per month, a car comes to your home. A car will come to your home. Pick you from home. Hello? The car will pick you from home and drop you to. And once the work is done, office to. It can be car also, it can be bus also, it can be any conveyance. Can I say, you are not getting money. You are getting facility. You are getting a benefit. Benefit of motor car facility. Motor car for traveling between residence to office. Office, tell me this benefit is a allowance or it is a perquisite? Fully exempt. Fully. Nothing will be taxable. Just imagine if you consider this amount as the benefit arising out of this facility, they will give you the benefit arising out of this facility is 1,500 rupees per month. Money is not given. 1,500 per month is not given in your hands. They are saying that this motor car facility is given the motor car facility is given for travel, and every month the value of this facility is 1,500. Is it a perquisite or it is an allowance? 1,500 per month amount is given, which you will spend for this. No, the benefit is given whose value per month is 1,500. If it was allowance, it was fully taxable. If you are a normal employee. But what if this benefit is given having this value? What will you do? Fully exempt. Even if the value is 1,500. Even if you are a normal employee, will not make any difference. Because this perquisite of motor car facility, conveyance facility, transportation facility between office to residence is fully exempt perquisite. But for that you should first know that it is a perquisite and not an allowance. But if you consider this thing as allowance, what will happen? You will charge this entire amount saying that the employee is a normal employee, and for normal employee, office to residence, residence to office, allowance is given, it will be fully. But bloody, this is not allowance. This is a benefit whose monthly value they have calculated so that you get confused. Getting my point? Hello? So please remember this thing. Pay attention. What is this? Residence to office to fixed amount regularly in addition to salary. To meet the cost of this travel, a fixed amount is given regularly in addition to, that is commutation or transport allowance. Given to handicap employee, exempt up to 3,200. Given to other employee, then it will be fully taxable. Yes or no? This exemption is given only if the CC is following 115 BSc? No. Even if the assessee is following 115 BSE or not following, this will be exempt. But wait, for this traveling, a conveyance, motor car or transport facility is given from residence to office and office to residence. A conveyance is given, motor car facility is given, transport facility is given. That is not allowance, that is a perquisite which will be fully. So taxable value here will be, they will deliberately calculate the value that from this the monthly benefit happening is 1500 per month, 1800 per month, whatever value they will monthly calculate, and they will give you that value so that you consider that value as allowance and charge it. Your answer will be wrong in that case. Got it, sir? Should I move ahead? Yes or no? Now how many perquisites in clause 3? In clause 3 how many perquisites are there? Motor car facility. Then see, domestic servants are provided, no? So whatever salary to those domestic servants paid by the employer, paid by the minus some amount will be recovered from you. Getting my point? That benefit is taxable fully. Done. Valuation done. Now gas, water, electricity provided by the employer. So whatever amount which is spent by the employer for your gas, water, electricity minus amount recovered from you will be the taxable value. Getting my point? But wait, here no, domestic servants provided by employer, gas, water, electricity provided by employer, meaning that the bills are not coming on your name. The liability to pay is not on your name. The bills will come on the name of employer. Liability to pay is on employer. Employer is providing it to you. You are not liable. There is no obligation on you to pay the amount for this. Yes or no? Domestic servant engaged by you? No. Engaged by employer and given it to you. Then it is clause 3. Gas, water, electricity purchased by you or purchased by employer? Bill will come on the name of. Then it is a perquisite under this clause. Getting my point? But what if domestic servants engaged by you? Domestic servants, it is your liability now and paid by employer. Still it is a perquisite, but not under clause 3. It will be clause 4. It will be clause employee's liability, employee's obligation met by employer. So if the domestic servants are engaged by you, domestic servants are, and the payment to them made by employer, or you pay, employer will reimburse. Even if you are a specified employee or a non-specified employee, in both the cases that amount will be taxable, because that is not clause 3, that is clause 4. Got it, sir? What if gas, water, electricity bills of your home coming for your name, paid by employer or reimbursed by employer? That was your liability. Gas bill coming on your name, electricity bill, water bill coming on your name, your obligation met by employer. This is not clause 3, this is clause 4. Taxable fully in your hands if you are a specified employee as well as you are a non-specified employee. It will not be clause 3. Clause 3 will arise only if the servants are engaged by employer and given to you. Liability to pay those servants is not on you. Liability is on employer. So whatever amount to those servants the employer will pay will be your benefit minus the amount recovered from you. That will be the value taxable only if you are a specified employee. Getting my point? What if the gas, water or electricity provided by the employer? Employer will buy the gas, water and electricity from outside agencies and provide that gas, water, electricity to you. Who is liable to pay? Because he is going and buying. That person selling gas, water, electricity does not know who you are. So the liability to pay for this gas, water, electricity is not on you. It is on employer. Employer buys and give it to you. So what will be your benefit? The amount paid to outside agencies by the employer minus if something recovered from you. That will be your value, which will be taxable only if you are a specified employee. Getting my point? But what if sometimes employer from his own resources, he will manufacture gas, water, electricity, and then he will provide. Still, it was not your liability. He is providing from his own resources. So whatever is his cost of production will be your benefit minus the amount recovered. That will be your benefit, which will be taxable only if you are a specified employee. This is done. This is done. Now one small question I am asking you. To pay the gas bill, water bill, electricity bill of your house, the employer is giving you 3,000 rupees per month. Is it a perquisite or it is an allowance? Allowance. A monthly fixed amount is given to meet this expense. That is an allowance, fully taxable. Yes or no? And anything out of that allowance, even if you are spending, is not going to give you any exemption because that allowance is fully taxable. Employer is giving you 5,000 rupees per month to engage your servants. Employer is giving you servants? No. You have engaged servants. Salary of those servants paid by employer? No, it is not a perquisite. Employer is giving you 5,000 per month. From this 5,000, keep your servants. What is this? Allowance. Fully taxable. And even if you spend some amount out of this to engage the servants, still for that amount you are not going to get any benefit. Will you remember this? Yes or no? Now next one. What is this? What is this? Now education facility. What is education facility? Simple. If this is employee. If this is employee. So this is children. These are children of employee. Now these children are studying in an educational institution. Now this educational institution is owned and maintained by employer. In this educational institution, the children of the employee are studying. So their cost of education in this institution, which is owned and by the employer, this cost of education is met by either the educational institution can be owned and maintained by employer, or this educational institution or in this educational institution employer has some arrangements. Meaning there is a nearby, there is a school. In that school, the employer has reserved 1,000 seats. Yes or no? So tell me, if the employer has reserved or booked 1,000 seats in that school, don't you think that school management will give huge discount per student? Yes or no? Or that school belongs to employer only. Employer himself is running and maintaining that school. Yes or no? So cost of education per student in that school will be heavily discounted, will be very less. So in that school, the children of the employee is studying. Who is studying? Who is studying? For example, this is employee and the children of the employee, one child, second child. Okay. One child is studying in standard 6th. Second child is studying in standard 11th. Both the children are studying this educational institution, which is either owned and managed by employer and where the employer has some. So for each of the child, the employer will have to spend some money as a cost of their education. No? How much amount the employer will spend? How much amount the employer will spend on the education of your child in standard 6th? On the education of your child in standard 11th. So cost of education for the child which is in standard 6 and which is in standard 11, it is 700 per month, and here it is 900 per month. Don't you think that this is the benefit happening to the employee? Yes or no? The cost which the employer is meeting, this is the benefit happening to the employee? No, this is not the benefit. No, this is not the. Why? Simple. This cost is met in this school or this school, where the cost incurred will be definitely lower, because this school belongs to employer, or the school where the employer has some arrangements. In this school, whatever cost which the employer will incur will not be the reasonable cost. It will be very discounted cost, will be very less amount. Yes or no? So this cannot be taken as your benefit. What will happen, Similar type of school in the same locality or nearby locality. For example, if this school was not there, if this school was, your child would have studied in standard 6th or standard 11th in some other school. Tell me yes or no. Other school in the same or nearby locality, other similar type of school. So if other similar type of school, if you see, if this school was not there, this educational institution was not there, your child would have studied in standard 6 in this school. Your child would have studied in standard 11th in this school. What was the cost of education in this school? That is reasonable cost of your education. That is reasonable cost of education. Reasonable cost of education. If your child would have studied in standard 6, no, the cost would have been 950 per month in this school. If your child would have studied in standard 11th in this school, it would have been 1300 rupees per month. Now tell me, the amount which the employer is actually spending is your benefit, or the amount which you are saving? Because you are not supposed to spend this amount, you are saving this amount. Why? Because in the same type of school owned by employer, your child is studying. If this school was not there, you would have spent this much amount, no? This is your benefit which you are saving, and not the amount actually spent by the employer. Because the amount in this school which will be spent by the employer will be very less, because it will be discounted amount. School belongs to employer, or school where the employer has some arrangement. In that school, the employer will be spending the reasonable amount or discounted amount. Discounted amount. This cannot be taken as your benefit. The benefit is whatever you save. This is the reasonable cost of education. This is the reasonable cost of education. Getting my point? Now this benefit will be fully exempt. If the reasonable cost of education of your child is up to rupees 1000 per month per child, then this amount will be fully exempt. Now tell me, for your child in standard 6, what was the reasonable cost of education? 950 per month. This is your benefit. This is your. But if this benefit is up to 1000 rupees per month per child, it will be fully. But what if it is more than 1000? Nothing is said. Only it is given in the rules that if the reasonable cost of education, which happens to be your benefit, if that is 1000 per month per child or less. If it is 1000 per month per child or less, then it is fully exempt. What will happen if it is more than 1000 is not given in rules. Rule is silent about that. So what you can do in this case, two possibilities. If the reasonable cost of education, which is treated as your benefit, if it is more than 1000 per month per child, then there are two possibilities. Either the excess amount will be taxable or the entire amount will be taxable. Both the things are correct. Both the things are, you can tax the entire 1300, that is also correct, and you can tax the excess amount of 300 also, that is also correct. But whatever treatment you are giving, you are supposed to give a note that in the absence of any specific clarification in the rules regarding the reasonable cost of education being more than 1000, regarding the taxability of reasonable education cost being more than 1000, we have taxed the entire amount. Alternatively, the excess can also be taxed. Such type of note you are supposed to give. Hello sir, will you remember this? Everyone. So this is 1300 per month, which will be taxable, or 300 per month can also be taxable. Minus amount recovered from the employee, if any, that also you can reduce. Getting my point, everyone? Now this will happen if the education is provided to children of the but wait, in a school or educational institution which is owned and maintained by employer, or where the employer has some. Now what if this is the employee? Okay, no, this is the employee, standard 6, standard 11th. Now this is brother of employee and this is sister of employee. Children or other household members? Now I am not talking about children. The discussion about the children is done. Now I am talking about any other household member. Brother, sister, spouse, hello, grandchildren. It can be any other household member. So let's take an example. Employee has one brother studying in standard 6th. And employee has one sister studying in standard 11. Both are the household members of the employee. Can the education for these household members, can this education be provided in this educational institution owned and maintained by employer, or where the employer has some arrangement? Yes. So here whatever cost of their education which is met by employer is how much? 700 and will not be treated as the benefit. No, this will not be treated as benefit. What will be the benefit here also? Here also the benefit will be reasonable cost of education. What was that? 950 per month or 1300 per month. This reasonable cost of education only is the benefit. Here also the logic remains same. What is the benefit? The amount actually met by employer. Is it the benefit? No. The reasonable cost of education is the benefit. Now in case the reasonable cost of education for children is up to ₹1000 per month per child, then it is not taxable. Yes or no? But that exemption is not given for other household members. That exemption is not given for, meaning that the exemption up to 1000 per month per child for reasonable cost of education which was available for employees' children will not be available for household members of the employee. If the reasonable cost of education is 1000, less than 1000, more than 1000, it will be fully taxable. It will be minus the amount recovered from the employee. Will you remember this? Will you remember this? This was educational facility given by the employee, given by the employer to employee's children or household member of the employee in an educational institution which is owned and maintained by employer, or where the employer has some. But wait, now please listen to me very carefully, huh? Now if I say, now this is what, this can be either children or any other household member of the they are getting education, see, now I have covered both together, children as well as any other household member of the, I have covered both of them together. Yes or no? Now they are getting education in an educational institution. In an educational institution other than these two. Other than these two. Meaning that educational institution not owned and maintained by employer and where employer has no arrangements. Can I say this is independent educational institution? Is it the educational institution owned and maintained by employer? No. Does your employer has some arrangements here? No. This is any other educational institution. Now whatever will be the actual fees of this educational institution, exactly the same amount will be spent by the employer. That was the reasonable amount, and that reasonable amount only is spent by the employer. So the actual cost incurred by the employer here will be treated as your benefit, because that actual cost will only be your reasonable cost. Getting my point? Hello? Because this cost will not be influenced. School does not belong to employer, or school employer does not have any arrangement. So this is completely an independent school. Yes or no? In this school, whatever cost others are paying, you are also supposed to pay that. But instead of you paying that, your employer is meeting. So your employer is meeting. Actual amount which he is paying is nothing but the reasonable cost which he is paying. No. So that should be your benefit. That should be your fully taxable. What did I say? Fully taxable. Fully taxable. Even if the facility is given for children or household members. Even if the value is 1000 per month per child or less or more than that, 1000 rupees exemption is not available here. 1000 rupees exemption is available for reasonable cost, and that too also for children. Here, whether the education is provided to children or it is provided to household member, entire cost which is met by the employer minus recovery, if any, from the employee will be fully taxable in the hands of employee. 1000 rupees exemption is not available. Will you remember this? Now 2-3 important things I will tell you, and then we'll wind up today's lecture. Okay, no? 2-3 important things. Please pay attention. See, sometimes the cost of training of the employee or refresher management course of this entire cost is met by. So will it be treated as a benefit? Will it be treated as perquisite, taxable in the hands of employee? The answer is no. Why? Your training, your refresher management course, the cost of that, if I am meeting, your employer is meeting, is not to give you personal benefit. It is for my benefit only. You will take training, you will do refresher management course. Because of that, you will be able to work efficiently for me. For you to work in a better manner, in an efficient manner for your employer might incur this cost. His intention to spend money on your training, to spend money on your refresher management course is not to provide you any personal benefit. Hence, any amount spent by the employer on this will not be treated as your personal benefit, will be fully exempt. Will you remember this? Yes or no? Next one. Periodicals and journals, meaning magazines for the employee. The cost of subscription of those magazines met by if those magazines are professional in nature, then the cost of subscription paid by the employer for the professional magazines of the employee will be fully, because that is required to discharge your work which you are going to do for your employer. Yes or no? But if the magazines etc. are not professional in nature, and the cost of subscription of those magazines met by employer for the employee, then entire amount will be treated as your taxable perquisite. It is your personal benefit. These magazines are not required to perform your duties because they are not professional in nature. Getting my point? Now, important point, educational scholarships. There is one section, 10 subsection 16. As per this section, educational scholarships are fully, any person giving educational scholarships to any person, that educational scholarship is fully exempt. Educational scholarship is fully. So now can your employer provide educational scholarship to you for your children, for your household members? Yes. So the amount provided by the employer falls in the exemption category, no? So that will be exempt. Even if it is provided by employer to employee, will not be treated as perquisite, will not be treated as salary, because that educational scholarship itself is an exempt income under section 10 subsection 16. Will you remember this? Yes or no? Now some free or concessional tickets which are provided by the employer to the employee. So if the employer is in transport sector, employer is in and providing the free or concessional tickets to the employee. So the value of those tickets, the value of that benefit will be taxable in the hands of employee. How much value? The amount of ticket which the employer would have recovered from outsiders. If you were not my employee, you are a person from general public, how much amount I charge for this ticket from general public? That is your benefit minus the amount which I am recovering from you. Yes or no? That will be your taxable amount. If the free or concessional travel tickets are provided by the employer to employee, this benefit will arise only to the employees of transport sector. Only to the employees of. So employer is in transport sector, employer is a transporter, and now the employer is providing concessional tickets or free tickets to employee or employees household members. So this is a personal benefit in the hands of employee. This is a personal benefit in the hands of employee. How much amount will be taxable? The amount of the tickets charged by the employer from general public should have been charged from you. Is the employer charging that amount? No. So that is your benefit minus the amount recovered from you. That balance amount will be taxable in your hands. Yes or no? But remember, if the employer is Indian Railways or the employer is any airlines, employer is Indian Railways or employer is, then this benefit will be fully exempt. Employer is Railways or airlines providing free or concessional tickets to the employee for himself or his family members, then this personal benefit will be fully exempt. Nothing will be taxable. So this valuation will be done. This valuation will be done only if the employer is any transporter other than railways and airlines. Only then this valuation will happen and the value will be taxable in the hands of which employee? Specified employee. Yes or no? And if the employee is a non-specified, we have seen 5 perquisites: motor car facility, domestic servants, gas, water, electricity, educational facility, and this one, free or concessional tickets, will be fully taxable. The value will be determined. We have already seen that how the value will be determined, and that value will be fully taxable in the hands of. What if the employee is a non-specified employee? What if the employee is a non-specified employee? Then these valuations will not be done because the value in the hands of non-specified employee is not taxable. Yes or no? Now, this thing, clause number 4, no, I have already covered. What is clause number 4? Any obligation or liability of the employee. So employee has any personal obligation or, but which is met by, is it a personal benefit? Will be fully taxable in the hands of employee. I'll give you examples also. Your servants which you have engaged, who is liable to pay? It was your personal obligation, no? Paid by employer, met by employer, perquisite under clause number 4. Your gas bills, your electricity bills, your water bills, which were your personal obligations, you did not pay, your employer is paying. Or you pay, employer will reimburse. It is a perquisite under clause 4. One more thing, do you remember professional tax? Professional, you are supposed to pay your professional tax to the state government. Whom are you supposed to pay? State government. It is your liability. Are you paying? No. Your employer is paying out of his own pocket. So your personal obligation met by employer will also be treated as your perquisite. These are few examples I gave. Any personal obligation, any personal liability of the employee met by the will be always treated as a personal benefit under clause 4, taxable in the hands of employee. How much amount will be taxable? How much amount will be taxable? The amount actually paid by the employer, amount actually met by the employer. Yes or no? There is no need to value also. The value will be known. It will be known that how much amount is spent by the employer, how much amount is paid by the employer, how much amount is reimbursed by the employer. That much amount is your personal benefit, will be fully taxable. Will you remember this? Will you remember this? This important point. From here we'll continue tomorrow, and tomorrow we'll finish this chapter. We could not finish it today, but we'll definitely finish it tomorrow. And tomorrow we are going to start with PGBP. Okay. So what you are going to do, I have already sent these notes. I guess you might have got. Today itself, read the entire notes, and till the time we have, till the point we have already had a discussion. Whatever questions you can see, you're supposed to solve those questions. Getting my point? And tomorrow when I'll finalize, see what is my target now? My target is to solve the main questions with you. When I'll be solving the main questions with you, not that time, all these things which are there in salary, house property, PGBP, all these things will be taken care of in those computation of total income questions. So I'm not wasting my time in solving the questions here, because I am already going to solve the questions for computation of total income. That time you will get an idea that how to calculate salary, how to calculate house property, how to calculate PGBP, yes or no? So my intention right now is to cover majority of the things given in each the chapters. But you can help me out that at least if I'm finishing a chapter right now, you study that chapter entirely at home, and whatever questions you can see, you please keep on solving the questions on that chapter. So that by the time I arrive at computation of total income, you should not be in a shock that bloody what is happening. Getting my point? So I want you all to take the maximum advantage of my visit here. I am here to help you pass in the examination. But at the end of the day, examination has to be written by you only. Yes or no? Yes, so see you all tomorrow. What is this? Bye bye. Bye bye. Bye everyone.